Hello, Maverick traders. This is Rob Reinhold. Nice to see you. I'm joined by Mr. Ankit Sharma, and September is officially closed and in the books. Great job this month to all of our traders. And remember, the market doesn't care what you did in September because we've got a whole new month ahead of us in October. So let's jump into the markets. We had another week of equity sell-offs. This is a third consecutive down week. We're down 8.5% for the month. We were very clear back in August that we were headed towards the seasonally weakest period of time in the markets. The 6 weeks starting in September, going to the middle of October, are the worst 6 weeks of the year. Now, look, that doesn't mean every year. This is on average. But we said, hey, look, let's be very wary. We're entering this very weak period. And sure enough, it hit this year. We're seeing very, very weak price action. And remember, we are now through September. So this seasonally weak period ends in early mid-October. We have no idea what's going to happen this year. This year it could keep falling. We have no idea. But we have to keep these things in our minds and say, hey, we have to be open to the idea that this bearish market could be entering its last phase to where the market actually has a nice little bounce somewhere in mid-October. Again, we don't know if that's going to happen, but that's what we have to have in our minds because that is the seasonality pattern. Ankit, what do you think is going to happen here in the first part of October?
Hey, Rob. I think based on where the markets are right now, I think we are slowly moving lower, but I think we need to get that capitulation before we start to see a bit of a rally. And I think that's really what I'm seeing in the markets here. We need that last capitulation move before we see a bit of a change. So far, the way we are closing again this week, last 3 weeks have been very bearish in the markets. I don't see a change until we get that. So maybe the next first couple of weeks in October might be that one. But, as we look at the charts, we need to get that some sort of stabilization in the markets. But right now, it seems like there's more pain ahead.
And more pain means strong U.S. dollar. We've seen strong dollar. We've seen strong Swiss franc. And surprisingly, this week, the pound started the week on a huge run down. There was news over the weekend that the new Prime Minister, Liz Truss, was doing more stimulus, and the market hated it. The pound dropped like 500 or 600 pips against the dollar. And then the Bank of England came out and said, hey, you know what? We're going to go in and shore up the bond market. Now, a lot of people said, hey, Rob, isn't this quantitative easing? No, it's not quantitative easing because quantitative easing is when the government creates more money. This is just where the Bank of England says, we're going to go in and make sure interest rates don't rise too quickly. And we're going to do that by intervening directly into the bond market. And that stabilized everything. So the pound that's been very, very weak for the last month or two, it had a nice bounce this week. We saw a big spike in yields on Monday, Tuesday, and then the U.S. 10-year got all the way up to 4.1%. It actually closed down around 3.7%. So let's take a look and see what was on the schedule last week. We heard from Fed Chair Powell, and he said more inflation is coming and more rate hikes are coming. Every time we hear from one of these central bankers, they're all saying the same thing. It's like, hey, it's worse than we thought. We're behind the curve, and we're going to be very, very active. On Thursday, we did get a surprise of Canadian GDP, much better than expected. It's supposed to be a negative number. It was a positive number. In this market environment, that's actually pretty good news. The U.S. on Friday, we got core PCE price index. Now, this is the most favorite index of the Federal Open Market Committee. This is the one they look at the closest, and it was hot. It wasn't crazy hot, but it was 0.1 more than expected. The market didn't like that at the first of the day, but you know what? We had a little rally here on Friday, but the markets ultimately gave that all back. And that's really what I wanted to focus on when we look through the charts, is that we reached these really key levels. We reached these really key levels of June lows. And I really want to take a look at the price action that we had off of the lows. This week, we got S&P down 2%, VT down 1.7%. Crypto surprisingly had a fairly good week. This one surprised me quite a bit. I have no explanation for it. It surprised me. I wasn't even looking at the crypto market this week. I was focused on lots of foreign exchange. Gold was up, oil was up, But what I really wanted to take a look at was the bounce. The bounce we're having. The last time we saw the volatility index reach as high as it is right now was back in June. If we go back to look at the volatility index, and I'll throw up a chart right here of the volatility index, you'll see that we had several times we spiked around this 32 area. And every single time we spiked at the 32 area, the markets rallied somewhere between 5 and 15%. We got up to 32 at the first of this week, and take a look at this price action. This is absolutely lousy price action. We were supposed to have a V-shaped bottom. So Ankit brought up the term capitulation low. Capitulation low is when people throw in the towel and say, that's it. And what happens is you get this huge burst of selling, and then there's no sellers left, and the market bounces right back up. We didn't get that when the VIX got to 32. We got a low base, which is really, really bearish. You want to see a nice bounce when the VIX spikes up. What you don't want to see is just simply a low base. So this is telling me this market is very, very likely to break lower somewhere over the next week or two. We take a look at what happened in the currency market. We talked about the pound. The pound had a crazy week. At the first of the week, it was down 3%. At the end of the week, it's up almost 4%. Crazy, crazy week for the pound. If you said, hey, you know what, I'm just going to ignore that craziness, you can see that the euro had a good week, the dollar had a good week, and the Aussie and Kiwi, which we said, hey, this is where you want to be short, they were the weakest currencies, down 1.5 and 1.1% on the week. As I said earlier, this one caught me by surprise. I have no words of wisdom here to say this is why it happened. I couldn't even write a credible essay if I was in college of why this happened. But it happened. Cryptos were strong this week. We'll see how this carries through. They are still not strong on a chart. This is still nothing more than a bear rally. But you have to take a look and say, okay, duly noted cryptos. If you are turning into an uptrend, we'll go ahead and go along with you. But until then, we're just going to be spectators. So looking at the market analysis for the next week, we are quite bearish. We are quite bearish here in the markets. Again, we talked about the VIX. The VIX is spiked up. We are supposed to be getting a big rally when VIX gets up to 32, 34. It's not happening, which is telling me we are likely going to go significantly lower. So we already took a look at the S&P. Let's take a look at the VT, and you can see the VT is already broken June lows. So world equities are much, much weaker. Same thing. We had this huge drop, this huge flush, close to an 8% drop in just a few days. When that happens, you usually get a V bounce. We did not get that. We did not get that at all. We got a low base telling you prices are likely headed lower. Cryptos did find a nice bottom. All right, we had a nice little bear rally here. Everything is still pointed lower. Moving averages are moving lower. Trends are moving lower. Everything is moving lower on crypto. So while yes, anyone who was long crypto, I'm happy for you this last week. Anyone wanting to get long crypto, I think you're crazy. I think you need to wait for those moving averages to start going a different direction, because right now, this looks like nothing more than a bear rally. This is the first week of the month, so we always know this is a very, very busy week as far as news announcements go. On Monday, we've got a lot of things. US ISM manufacturing out at 10 a.m. And then we hear from the RBA. The RBA is going to come out and do the rate statement. Estimates are they're going to raise by 50 basis points. Those are the estimates. Now look, it's probably going to come in as 50 basis points, but here's the question. Are they more hawkish than the market expected? If so, we might see some strength in the Aussie dollar for once. I don't think we're going to see that. I think they're going to be like, hey, this is what we've done. We're happy with where we're going. That's not enough to help the Aussie out. I still like the Aussie to the bearish side, but you need to be conscious that on Monday night, there's major news on this Aussie. On Tuesday, we hear from the RBNZ. So RBNZ comes out. They also are expecting a 0.5% raise. Same thing here. If they're much more hawkish than expected, okay, maybe the Kiwi gets a little bit of a bump, but I think you want to be selling both of these currencies until we get that capitulation low in the market. Right now, this is a bearish market. You do not want to be long Aussie and Kiwi in these environments. And then it is the first week of the month. So we have US and Canadian employment report on Friday. We will be meeting live as a firm on Friday for the employment reports. And we'll also be meeting live as a firm on Monday for the RBA rate statement. So again, we're looking for trades. We'll be building trades before these announcements, and we'll see if we can grab some pips. This week, we think that the equity markets stay weak. We have two big central bank announcements, Monday, Tuesday on Aussie, Kiwi. If you're trading those currencies, be cautious around those periods of time. And then Friday, we've got employment reports out of Canada and the US. So let's take a look at the currencies, and let's take a look at these one by one. Starting off with Bitcoin here. Bitcoin, again, bear rally. That's great. Great, we got a little bit of a bullish move while the market fell. That's great. But look, there is nothing here to be excited about. This is just a -1 and a 0. We don't make trades when there's nothing going on in currencies. There's not enough velocity, trend, and momentum to make any sort of trade on Bitcoin here. So Bitcoin is just a pass. Come over here to Bitcoin Cash. Same thing. Ultimately, we've got this support level here. But look, we're not going anywhere. We're simply at the moving averages. You can say that we've broken out of some short-term resistance here on the velocity score. Okay, but look, where's it going to? Okay, maybe it's going to 130. Okay, that's a decent trade. That's about a 5 or 6% trade. But in crypto land, that's a pretty small trade. So while Bitcoin Cash probably looks the best of all the cryptos, we're not really looking to make any trade on cryptos as a basket. Here is Ethereum. And it seems like ever since Ethereum had its fork, it's been really underperforming. Now, I have liked Ethereum as the best crypto for most of the year. I no longer can say that. This is a really pathetic, lousy bounce. It's just a lousy, pathetic bounce. All the other cryptos had a much better bounce. This one didn't. So for me, I am no longer on the Ethereum bandwagon. Look, I was always saying that it was the best of the worst as the market fell down. I can't say that anymore. It is actually the worst of the sideways, is really where it is right now. So for me, Ethereum is no longer interesting for a short-term trade. I've got to wait for it to gather some strength back up before I'm looking to be long it. Litecoin, really the same thing as Ethereum, not really showing any strength here. Velocity score to 0. So cryptos are really just not that interesting here. Now look, that's fine. That's why we trade multiple currencies, because sometimes there's some markets that just aren't good. So people say, oh, well, cryptos are not moving right now. They're boring. Yeah, you're right. But here's the great news. Holy cow. I have not seen this good of a trading environment in foreign exchange since 2013. I mean, Ankit, you've been trading since 2009. When's the last time you saw a market this good?
Hey, Rob, as I go back in time, I think, like 2013, 2012, and also like last one I would say is 2016, like, close to the U.S. elections. Like that was a lot of movement happening. I think things have been a lot more quieter since 2017, but yeah, like, you had to really go back 2016, we had Brexit at that time. So, it kind of reminds me a little bit of 2016 and going back to those years. But yeah, the last 5 years, I would say it's not as the same environment as it was.
Yeah, and I'm so happy the volatility is back because we love volatility. Volatility just means that you're going to do the same system, but you're going to be paid more for it. That's what we really like. We like volatility here. Look, we've loved the dollar for a long time, and the dollar still looks absolutely bullish. Okay, so look, we had a run up to this high here. This is the US basket against 7 other currencies equally weighted. We got a little pullback, but look, on Friday we got a bounce. We're looking at dollar strength. We still like the dollar, and if the market keeps dropping, which we think it's going to do, the dollar is going to be the beneficiary of this. So we like dollar long still. Look, I know it's been a long trade. We've been long dollar pretty much all year long, other than a couple times it showed some little bit of relative weakness. Look, we'll keep ringing the register until the trends change. Until then, we'll just stick with the relative strength here. So we like dollar long. Let's talk about yen. Now, I do not have a good call on yen at all. Yen has been typically in the past, it was clockwork. When you had a bearish market, you just bought yen. And you bought yen, and it was the easiest trade in the world. And everything fell against the yen. And it was just a simple, easy trade. The Bank of Japan broke the yen. They've been very, very dovish, and they've just thrown everything they can to keep the yen weak. And so the yen is not acting as a currency of safety. You can see that over the last couple of weeks, okay, we've come back out of just terrible. We're just now to neutral. So for me, I would love to be more positive on the yen because, again, I think the market is headed significantly lower here in the next week, but it just isn't showing it. Ankit, do you have a better call on yen?
Well, absolutely not. I mean, we have seen, yen again has been crazy currency to trade this year. But again, we had the Bank of Japan intervention that took place last week. Again, it's such a mixed picture here because, you see that where the yen is at extreme levels where it is concerning for the Bank of Japan. But then, like last time they had a meeting, they didn't change anything in their monetary policy, but they did do the market intervention. So I personally think that at this point, the yen is no longer the best short, but then at the same time, it's no longer the best buy as well. I mean, looking at this week, yen is kind of stuck in the middle there. We had places where there's more weakness, and we have places there's more strength. So yeah, it's really wedged in between. So I think whenever you have something wedged in between, it really doesn't become like a buy or a sell to me. I think it's better to just put it on the shelf and just trade something that's actually moving. I mean, like this week we have euro and we have pound. I mean, there's better things to buy, and we have Aussie and Kiwi. There's better thing to sell. So I think it's just kind of right in the middle there. So until something changes, maybe if there's more, I'm really watching the 145 to 146 area on dollar yen. See if there's any further intervention. But I think the only thing can really change things is if there's more interventions that takes place. But I think yen is kind of, I don't really like it as a short, but I don't really like it as a buy either.
And this is the exact reason why we have multiple currencies that we trade. Some people say, "Oh, I trade euro dollar." Well, that's great, but that's kind of silly because you're handcuffing yourself, and sometimes those two currencies aren't giving you a great trend and great velocity. So this is why we always like to go through our relative strength exercise and find, okay, what are the good ones, what are the bad ones, and then all the stuff you can't figure out that are hard trades, just forget about it. Just totally forget about it. This is bringing me on to the Swiss franc. Look, the Swiss franc is having a nice trend, but look, I'm not super excited about the velocity of this trend. It's creeping its way higher, but it's a slow trade. It's a slow trade. We've got a 0 on the velocity score. Look, you can be long Swiss franc, but why would you be long Swiss franc when you could literally just come over here and be long euro? This is where we're seeing a lot of strength. We're seeing this pullback that we got. We had a long-term trend change. The euro has been weak all year long. We finally hit a bottom. We crawled back above moving averages, got a 20-50 moving average cross. We pulled back, bottomed out, and we're a rocket ship higher. So for me, I like dollar, but I like euro even better. What's your call on euro?
Well, I think we should just follow the chart, and the chart is pointing out higher. I know I had questions this week, like why euro is strong. We had news on the pound, we have news everywhere else. But I think it's at the same time, like if you really look at this year, I mean, we had moments of these currencies that got really hammered. We had euro that was really hammering down, that lost so much value entire summer. I mean, against the dollar, even against the Swiss franc. Now we saw the exact same picture play out with the pound. I think as these currencies kind of come under pressure and they kind of go out of it, it's better to change with it. So I think at this point, I don't really see any big reason to be shorting the euro. I mean, it's finally giving us good trend scores and that. So I think it's better to focus on other places that are moving lower. So I do like euro on the upside. And in 2 or 3 weeks, we're going to have the euro, the ECB press conference as well. And they're likely to raise rates again. So I think at this point, the euro looks much better than it has looked for the past few months. So that's the time to really use that into guiding it higher.
I love what you said, Ankit, about just follow the chart. As a new trader 25 years ago, I literally used to yell at my computer screen, why? I couldn't figure out why. And you know what? It never answered me. Never once told me why. And I finally realized I'm an idiot. Stop yelling why and just accept it's happening. Look, we don't have to know why the euro is strong all of a sudden. I mean, things look really bad in Europe. I mean, the Ukraine war is intensifying and they might have some shortages of gas into the winter this year. Things look terrible. But guess what? Follow the charts, follow the trend. It says go long euro. Pound had that huge fall last week. So we had this huge fall, and you can see this was all within 1 week. It's just a crazy, crazy week. Huge volatility. I mean, this is on a basket, and this basket moved 1,000 pips. These baskets are smaller volatility, so we saw even bigger moves in some of the pairs. Okay, so where are we? It brought us right back into between the two moving averages. My rule is if it's between the two moving averages, just put it on the shelf and come back later. So maybe that was the turning point for the pound. I don't know, but I'm not going to stick my neck out for it. Maybe it's a bear rally. I don't know. I'm not going to stick my neck out on it. I might next week when I get a little bit more data. We're always looking for currencies that are moving. And you can see here, this one's not really moving. Okay, we have a little bit downward movement here, but we've got some support down here. Yes, the velocity score. So in the short term, okay, if you want to be short CAD, I think it makes a little bit of sense. But until we really break through the support, I'm looking to be more spectator of CAD than anything else. And this is the reason why. When I'm looking for something to sell, I'm looking at two currencies. I'm looking at Aussie and Kiwi. So Aussie has broken down. We are reaching into these support levels, so we cannot ignore that. We likely could get a bounce, but I want to be a seller of any bounce in Aussie. So for me, I'm just looking for opportunities to sell Aussie. And frankly, I actually like the Kiwi even better. I am looking actively for points where to short the Kiwi, where to sell it. If the market continues to drop, we're going to see the intensity pick up in the selling in the Kiwi. So it's really pretty simple here of what's moving. We've got dollar, euro, Swiss franc are moving to the upside. Kiwi, Aussie, CAD a little bit moving to the downside. Everything else is on the shelf because it's not clear. So we're going to be focusing on those trends. In the short term, what's showing the most velocity to the upside is euro and the pound, but we're going to really focus on the euro because we have the trend in our favor. And what has the momentum to the downside? It's Aussie and Kiwi. Everything else, hey, you know what? Just put it on the shelf. Do your analysis every day and come back. Maybe some of these change. And on Thursday, Friday, you might be able to make a trade on Swiss franc. But until then, we want to stick with what is actually moving. So let's pair up some of those currencies together. So of course, I'm going to be taking a look at Euro Aussie and Euro Kiwi for possible longs here. I'm going to start with Euro Kiwi since Euro is my favorite long, Kiwi is my favorite short. And let's go out to a daily chart just so we can get a bird's eye view of what has happened here. Now the Euro has been very weak all year, but the Kiwi has also been very weak all year. So we are moving up to these levels, and you can see we have actually gone through the yearly high here on Euro Kiwi. Now this is a big, big candle here. Big candle here, almost a 2% move in 1 day. Yes, we always want to be very cautious about chasing trades. However, it's telling us this is where the action is right here, right now. At the start of next week, I'm going to be looking at this pair. And if we come down to like a 4-hour chart, we can see that we did break out of some resistance here at the 172. I would love to see a pullback. I don't know if we're going to get one. But for me, I'm looking at, are we going to get a pullback or a base? This is what I'm looking for. Again, I don't think we're going all the way back down to 172, where the last bit of support line is. But a pullback, to the 173.5 area, I'm definitely very interested in any sort of pullback. Now, if it doesn't give me a pullback, I will settle for a base. We can just simply trade sideways for a bit. I will be very happy to buy a high base breakout. But Euro Kiwi is my favorite trade right now. It's got all the momentum. It doesn't mean that momentum's going to stay, but remember, we're looking for where the momentum is. Let's jump over to Euro Aussie. Euro Aussie looks pretty similar. And this is a trick that we like to do here at Maverick. So we like Euro long, and we're trying to focus on, okay, is it better to be long against the Aussie or the Kiwi? To answer that question, you can actually just pair up those two currencies. So if we take a look at Aussie Kiwi, I'm going to put this on a 4-hour chart. Okay, you can see that over the last couple days, it really hasn't mattered which one you've chosen. They've been about the same for the last week. Currency hasn't changed against each other, so they've been fairly weak together. If we get a breakout of this range, then I want to be long the Euro against the Kiwi, because that means the Aussie is stronger than the Kiwi. If we break down, I want to be long Euro against the Aussie, because it's showing me the Aussie is now weaker than the Kiwi. But right here, right now, there's really no difference between the two. Ankit, what pairs do you want to take a look at?
Hey, Rob. Well, I'm definitely looking at the same similar areas that you're looking at. I think what really we're finding out here is that a lot of the trades, I mean, we're not really seeing big turnaround stories. I mean, for the last 3 weeks, it's the exact same thing. Kiwi has been the weakest. We have Aussie being the second weakest, and then on the stronger side, we had the dollar. So I feel like there's not much has changed to the narrative of the markets and the movements. And as we take a look at the chart, especially a monthly chart, we do think, it does look extended. I think everything that I look at is a little bit extended for me. So I would like for things to kind of snap back in ranges or in places where we can actually see a better risk to reward. But yeah, like after seeing these big moves, especially in Euro Kiwi, Euro Aussie, I think I would like to see things settle down a little bit. So going into next week, I'm very much focused with the news events and see how that would affect those currencies. So I'm very flexible next week. I think what we really need to pay attention to is what really happened with the equity markets, because when we talk about that correlation, I mean, this is a perfect example of correlated moves. I mean, remember like back in March when we had the Ukraine war happening and we had Aussie and Kiwi rising while the markets were struggling. Those are always difficult markets to trade. I mean, right now, when the market rips higher, the currencies rips higher. And when the market falls down, and when we see the Aussie and Kiwi crashes. So I think the real question is really what the market does. And I think based on that, it makes it easier for us to pick those currencies. So I think as much as you want to focus on those individual currency setups, but you also want to make sure that you're also on the right side of the markets, because if the market can somehow catch a rally, I think that would create these opportunities on the shorter term. So I think it will go both ways. And this is where I want to point out the volatility is higher. And when the volatility is higher, it could go both ways. You can see a quick moves one way or the other. We saw the same thing happen with pound. We got a big flush down and a big rally. I mean, I wouldn't be surprised we see similar price action with some other currencies like the Kiwi that has been getting hammered for the last few weeks and months. I think we could see some capitulation happening somewhere. So I think just pay attention to the markets and then pick those pairings accordingly. You do better overall.
And Ankit, I think that's a very good warning to people. We are seeing very high levels of correlation between equity markets and currency markets. Whenever we see these high correlations, we have to recognize that if the stock market rallies, we're going to see probably a big jump in Aussie and Kiwi. And if the stock market falls, they're going to continue falling. We're seeing very, very high positive correlations with equities at this moment. Let's go ahead and wrap this up. We think the markets are likely to remain weak. Now look, if we get an intense bout of selling this week, let's say we get an intense bout of selling Monday, Tuesday, I think that might be the actual low of this wave, because we are running into the end of this seasonality cycle where usually the markets tend to find their footing right around October 10th, October 15th. So we're not that far away from a period where we would expect the market to find its footing. And if we have really heavy selling early next week, I think we could get that bottom maybe October 7th. If next week it kind of chops around a little bit and then we get some more selling at the end of the week, I think we probably have one more week of weakness to go before we get to that October 15th point. So we think there's one more flush left to go, which is why we do like long euro, long dollar, short Aussie, short Kiwi. We think that is the trade. Once we get the flush, and if we get the flush, then I think things change, because I talked about how there's a high correlation right now with equities. If we get the big flush out and then we get a massive bounce in the markets, I think you want to be just the opposite. You want to be long Aussie Kiwi and you want to be short dollar and euro. But until that happens, I think we just got to stay with what's working right now. And again, that's why we do our daily updates and we meet live on Wednesday, so we can always be talking about the changes in the market. Well, that is it for us. Thank you for joining us. Everyone take care and have a great weekend. Goodbye, everybody.